Yo, what's good guys, Mo here, welcome back to another video. So in today's lesson I'm going to go over a very specific tool that I feel a lot of people kind of, they don't really give it the recognition it deserves, and a lot of people don't really use it the correct way. So I'm going to show you guys the way I use it in conjunction with my smart money concepts and how I'm able to absolutely snipe trades using this strategy, right? So the tool that I want to be talking about today is the Fib tool. Now really quickly, this is actually a setup that I had from yesterday. I marked it up on one of our premium calls, right? So I called GU yesterday out to the team on the 4-hour, boom, triggered us in, dropped, smashed our take profit. Now GU wasn't actually the only trade that we called out, right? We also caught USD CAD from this area here, as you saw it marked out, boom, here take profit. We also called out USD MXN. These were all on the call yesterday, and as you can see, boom, triggered us in, sniper entry, wick entry, and then boom, smacked our take profit. So that was a very nice trade that we got into yesterday. So if you guys want to get these type of trades, these signals, access to these calls, make sure to message us on Telegram or hop onto our site and purchase one of these packages or claim a free trial. Anyways, getting back into the video, so the tool that I'm going to be going over, guys, as I said, is the Fib tool, right? So really quickly, I want to take the Fib tool here aside, right here. So the Fib tool, a lot of people use it for a lot of different things, but what we use it here for is to find areas of premium and discounted levels, right? Discounted areas, just like so. So for example, if you are looking to sell, right, if you're bearish and you take your Fib from this high to this low, right, you're taking a look at premium area, right? So this is the equilibrium, this is fair value, 50%. It's not a decent price to sell at. I mean, it's not completely cheap to sell at. It's right in the middle. What you want to be looking at is more of up here, these more expensive prices. So the 71, 78.6, 88.6, anything above that. So this right here would be considered premium, right? So once you're taking your Fib tool from a high to a low, what you want to be doing is waiting for price to pull back into these areas before you want to sell. These are very highly reactive areas. Same thing goes for trying to buy, right? So you're not trying to buy up here. Let's just say, for example, the market is pushing up, right, and the market does its pullback. You don't really want to buy the market here, right? It's still a bit more expensive to buy at, so you want to find more discounted prices to buy from down here, either 71 area, which works really well, right, or price might want to come down to 76, depends. But this area is going to be very active for price to start pushing off of, and that's where you want to start buying, right? So I'm going to take you guys really quickly to the charts, keep this short and sweet, right? So yesterday we could have marked out, as we saw, we took a look at GU. We saw that clearly we're in a very downward structure, right? So we're in a bearish market right now on GU, as you can see, something like so. I just draw two trend channels, just one trend channel to see where the market's going. But forget about this price action. We're going to take a look at this high and this low now. Very simple. That's how you want to do it. You want to take your Fib tool from this wick, right? A lot of people go body to body. I like to go from wick to wick. So this body right here, well, it's wick, right? And then this wick here. What you want to drag it from this high to this low. Remember, it's not from low to high, it's high to low. And then if you're trying to buy, it's low to high. So right here we're selling, so we're going from high to low. And where do we start looking? We start looking anywhere above here. Boom. So we're not trying to sell, we're still not trying to sell at this area. We're trying to find more premium price to sell at. What did price do? Price made a low, obviously has to make a pullback, right, to create a higher low before making another lower low. It comes up beautifully to the 71 area, and now like this missed by an absolute like pipette, really. Boom. That was an absolute entry right here. How could you use this in conjunction with your smart money concepts? Boom. You have your institutional candle here, right? The last up candle before the down move. We take this and we want to measure the 50%. Right, we want to measure 50% of the candle. Boom, this is 50% of the candle. Now, here's where it gets interesting. A lot of people ask me, where do we usually take our entries from? the open of the candle or 50%. We know that both are valid entries, but which one should you take? Which one's better, right? And here is how you know which is better. So from the open of the candle, if the 71 lines up usually with the open, I usually like to take from the open, and if there's no imbalances, etc. But as you saw, the 71 level lined up beautifully with the 50%. So a better entry to take GU from, and just to maximize your profits, absolute sniper entry would be to take it off to 50%, because the 71 area right here lined up beautifully, right? And I would have tried to sell GU from this area, and as you can see, triggered you, wick entry, absolute sniper entry, and price dropped really strong for over 126. Now I would have aimed for this lower here for a nice 90 pips, and your stop would have been so small, only 22 pips, giving you a 4-to-1 risk to reward. All right, so that was really a nice trade. So let's take another example now. Here's the thing, this can be used on absolutely any time frame, the 1 hour, the 2 hour, the daily, the 5 minute. I'm going to go over every single time frame right now for you guys, just to prove how easy it is. All right, so I'm just going to find random examples. I'm just going to go on the daily time frame and show you guys an example on the daily time frame. Now I'd like to take a look at this right here. So we're trying to sell from here, right? So where would we be looking for sells? We take this high right here to this low, to this wick, price drops down, right, hits the support area, pushes up. Now we're looking for sells. Our institutional candle is based here, boom, we're looking at this area, we're looking at the 71 area, boom, price comes up to the 71 area, breaks through it. Now we can see a lot of wicks. Price isn't closing above the 786, it's wicking. Then what does it do? One last big push up to the 886, absolute sniper entry, and price drops. There you go, and you could have gotten an entry there. If you missed it, you probably could have dropped down to the 1 hour time frame and be able to catch a re-entry, right? So for example, we missed it on the daily time frame. So what do? We take a look at the candle that triggered us. So as you can see, this was the area that triggered us on the daily time frame. This candle right here, right? This makes up the daily time frame. What do? We take from high to low. Right, so this high to this recent low. Not this one, because that's where we're looking to sell from. And what does price do? Comes up beautifully, 786 area, absolute sniper entry to the dot, and you could have sold this for years. Right, so this dropped, this just went crazy. You could have held this for ages. Boom, an easy 356 pips. So that was really nice pay on that. And the best thing about it was we were able to catch clear entry. Why? Because we had our last up candle before the down move, which was our IC candle, just like so. So you could have gotten your entry right here. Absolute banger of an entry. Now I'm gonna take a look at another pair, guys, and let's see if we can right, USD CAD, right? Another perfect example would be here. Right, so let's take a look at this recent price action. We take a look at this low to this high. We're trying to buy, right? So where will we be looking to buy now? We can see that price is clearly bullish, right? It's kind of higher high, higher low, higher high, higher low. We wait for the pullback. Where do we wait for the pullback? To anything below the 50%. Now, boom. Whoops, we're taking a look at this red box here. This is where we're trying to buy from. Now the last down candle before the up move, this will be our candle right here. Now this is called a propeller candle, which I'm not going to get into now, right? And it's called the continuation candle, but I'm not going to go into this one now. Now here would have missed us by literally such a small, probably like a pipette, something like that, and price went off this area. But you can see price is so reactive around these levels. I'm going to take a look at one more example for you guys. Right, another example would be AUD-CHF, right? So from this low to this high, right, price is clearly bearish on AUD-CHF, create a higher low, a lower low. We mark this high to this low. We look to sell on that pullback. Price pulls back beautifully to the 71, right, 0.71, absolute sniper entry, and price starts dropping once again. So as you can see, you don't really need to complicate this. It's absolutely so simple, and you guys can catch sniper entries just by using the FIP tool. Now I do advise using other confirmations, right, such as institutional candles, etc. But the FIP tool is so powerful once you know how to actually use it the right way. Now, as I said, guys, I wanted to keep this short and simple, so I appreciate everyone for hopping on this video. Make sure to drop a like and subscribe. And as I said, guys, if you want to get access to our FU trading course, our smart money course, where we provide all these lessons, we have quizzes that you guys can take to help you out, right? We also have our advanced section, and we do our signals. We do 5 calls a week, right? 5 market analysis calls a week. And if you're interested in one-on-one mentorship, that is included in the lifetime package, right? So as I said, if you guys are interested, make sure to buy it from here or hit us up on Telegram and we'll get you set up. So thank you guys so much for watching this video, and I'll catch you guys on the next lesson.